Welcome Tuesday morning on the floor of the New York Stock Exchange. At this moment, we are seeing the indexes all in the positive territory, but we are going to talk about the session today with my guest on the floor. As you can see, is Mark Otto, designated market maker at Knight Capital Americas. Mark, thank you so much for being with us.
Thanks for having me back.
So, Mark, great comeback after the long weekend, after Memorial Day. 15,519 points now for the Dow Jones, 217 points above Friday's level. What happened?
Well, it's the same story that we've seen with the continuation, which is basically what traders are looking for. Central banks around the world have been supporting the economies, and it's really driven the markets up higher. So the S&P coming into the day was up 15% year to date, so it's pretty impressive. People were starting to speculate whether or not the Fed here was going to unwind QE3 sooner than later. So we saw that temper on the markets last week. However, over the weekend, the Bank of Japan and the ECB have reaffirmed the fact that their policies are going to remain true going forward, and we're seeing the rebound in the markets today.
Yeah, so some reassurance from other central banks, but we had very good news about the economy here today. I mean, I'm talking about the housing sector with the home prices really up in the month of March, and also we have seen Americans being very, very confident. I mean, the consumer confidence is still very high. So if we have good news from the economy, there should be more fear on the market that the Federal Reserve could taper down its stimulus.
Everyone's going to be looking at that going forward. That's a big question mark as far as globally what central banks are doing here in the United States. That definitely is a consideration. Consumer confidence numbers were astronomically high today. So they were looking for 71.2. They came out at 76.2. The last reading was 68.1. So it's an impressive jump. All indications are, and reports that I've seen, that money is flowing into U.S. equities. This is still the place to be. I mean, at this point, you're going to see shorts get pressed. We are setting new highs again. So, it's although people are speculative of what's going on going forward, I think the momentum continues to be the upside.
And can we say that the effect that we are seeing on the consumer confidence is pretty clear from the wealth effect created by the market, and a wealth effect actually not only from the very good stock market, but also for the housing market, getting better. I mean, especially the prices of properties. So it doesn't tell us that much about the economy, more about the wealth effect.
Absolutely. When interest rates are going to remain low, I refinance my house, so I see people taking advantage of that, and people are looking at the housing sector and as an investment going forward. I mean, you are getting bargain prices. It is unfortunate in some cases for sellers because someone had a $500,000 home, they might be selling it at a discount. But more and more, I'm seeing my friends saying that, hey, I'm going to sell my house because more than likely I'm going to get a deal on a $750,000 house when I upgrade with a lower interest rate as well. So that wealth effect is certainly there. The interest rates are low. The confidence is there. 2/3 of our economy is spending. So that's something to really take into consideration, more so here than other countries.
So now we're going to have few more economic figures this week, but the big expectations are on the GDP revision for the first quarter that we're going to get on Thursday. Probably we're going to have a reaction because it's a number that the Federal Reserve will really look at closely, right?
Absolutely. I mean, if it breaks away from the 2.5, which is expected, in either direction, I'm sure the market will react. Later on this week, obviously the initial jobless claims, we're sort of getting numb to that. We're getting used to seeing them be good. So 340,000 is unchanged. So that's not going to be a big shocker for the market. Consumer spending is going to be out, and the on Friday we're also going to have the Michigan confidence numbers as well. So it's more minor data. But like you said, I think the GDP, we may see some sort of reaction. However, I think it's going to be a big miss or a big hit for the market to actually react.
So we'll see after, especially after the movement that we are seeing today.
Absolutely, yep.
So now let's talk about China for a moment. You know, it's totally related also to United States. The U.S. audit regulators have found a compromise with the Chinese government in relations to certain companies that are listed abroad. I mean, here on a New York Stock Exchange too. So I know that you are a specialist on the floor, as we know, and you take care of most of the Chinese company listed here on the floor. What difference does it make for the companies that are willing to come from China and to be listed here, and the company that are already listed here on the floor?
Well, to appreciate the situation for people who haven't been monitoring it, you have to go back to December of this past year. The SEC filed suit against the big four accounting firms that are doing audits in China. The suit was saying that they couldn't produce paperwork for audits that they wanted out of China. There were 9 companies that they were zeroing in on. The auditors said that they couldn't produce the paperwork simply because of Chinese state secrecy laws. So they really were depending upon Chinese regulators to do the work for them. So the PCAOB, the Public Company Accounting Oversight Board, which sort of these auditing companies have to actually register with, was the one that made the breakthrough. So they actually were working with Chinese regulators for years now. They reached an agreement where they could actually look at the books of China-based U.S.-listed companies. So this is a double-edged sword, I guess, in some cases. There is apparently, from what I hear, there's a pipeline of China-based companies that are looking to list here on the NYSE or other markets here in the United States. This could certainly be a plus for them because people want transparency in the market, and this will actually add to that. The other side of the coin is perhaps in some cases China-based listed companies that don't want that transparency or don't want to have to actually put up with this may actually delist and go to Shanghai. So hopefully the IPOs will make up for that.
We'll see. We'll see in the next few months, if more Chinese company will come here at the New York Stock Exchange.
Absolutely. Right now, China has been somewhat in focus. Macroeconomic data has been, mixed. There have been some misses that are concerns for people. The Chinese premier is actually in Europe this week, so he's sort of tempering people's expectations for Chinese GDP for the end of the year. They've actually revised from 7.5 to 7. So it sounds bad. However, last year they set it at 7.5. They came in at 7.8 at the end of the year. So typically they set the bar low, and most analysts always project higher. So I would anticipate that now that it's 7, maybe people are going to reel into 7.5, more than likely somewhere in that area. They are saying that their focus is more long-term structural changes in their economy. You're seeing, they want domestic consumption. They want foreign interests to invest in China. So those are some of the things that they're working on right now. They're also looking at urbanization, getting people in from the West, in from the farmlands, working into the cities and contributing to the economy as well. So all these things going forward, are more long-term good news for China.
And big changes too, yes.
Absolutely.
Thank you very much, Mark, for being with us.
Thank you.
And thank you for listening.